The InsTech member survey just came out, and it shows high level of opportunity for increased and improved provision when it comes to insurance technology. I guess, Matthew, I wanted to know your view of that 80% number.
It didn't totally surprise me. Still, things are changing very fast just now. Insurers have got some of the basic information they need, but with an ever-changing environment out there, there are always going to be needs for new information, higher resolution information. So what it does tell us is that there's still plenty of opportunity for organizations that are building tools and data and analytics to help insurance companies create great products to help insurers help their clients.
And so I guess in terms of the areas where there was high levels of satisfaction, it was parametric, property intelligence, and payments. And I presume that's because those offerings have become quite crisp. Insurers have really been educating themselves about those offerings, and really doing really effective use cases, figuring out what works and what doesn't for them. Two of the areas, parametric insurance and property intelligence, are areas of focus for us at InsTech. We've been running events, writing reports and articles for years now. I just wanted to understand, in particular for those two areas, what do you think is driving the high level of satisfaction?
Yeah, I mean, certainly there's a lot been happening in parametric insurance. We reckon there was $700 million of premium placed last year. That's only going to keep going up. The benefit of parametric insurance is it's providing coverage for areas that previously either there was no insurance available or it was really expensive. And what we're seeing now, with more data becoming available, some very skilled people looking at how to apply that data to an index to create transparent but credible indices using parametric insurance, that all comes together to create new products insurers can offer their clients and therefore provide more comprehensive risk coverage. So very encouraging trend. We expect to go and see more of that. When it comes to property intelligence, that's obviously a much bigger area for insurers in terms of what they're underwriting. There have been tools and models around for 20, 30 years now, but the perils are changing through climate change. We're seeing more losses in different areas, from flood, from wildfire, from hailstorm. And so whilst the traditional tools are still serving a critical purpose, there's still more opportunity for, again, high resolution of data in areas that hadn't previously been seen before as major perils. And it also down to things like the assets themselves. So you're looking at the nature of the property, what it's built from, and how that impacts things like the rebuild cost.
So it looks like despite high levels of satisfaction, there's actually still plenty of opportunity to develop new products or improve the ones that are already out there. I guess if we look on the other side, we have the areas where buyers felt they were less satisfied with the provision, and the two standout areas were crypto and supply chain / non-damage business interruption. COVID-19 and the Suez Canal situation really highlighted the importance of supply chain and kind of non-damage business interruption for many people. I guess, what is your view on how we can improve buyers' perception of the provision in those areas, or what needs to happen for buyers to engage more?
Yeah, so I suppose crypto is still a big unknown, quite hard to insure. So no surprise, people are still looking for new ideas, new tools in that area. Non-damage business interruption and supply chain are hard to model, hard to understand what the true risk is. So for most companies that are being insured, they'll know who their suppliers are. What is difficult for them, or sometimes impossible for them to know, is who are the suppliers of the suppliers. And the reality is, this is also to some extent an opportunity for people assessing the risk, because you get certain areas where industries such as car manufacturers, for example, they rely on brake parts or chips all coming from certain areas of the world. So we've seen in the past in Taiwan, when there's an earthquake, big disruption to the car manufacturing industry because all their supplies came from one place. So although it's a harder problem to solve, there are probably some ways that are sort of different and more creative about how to analyse this that people could start to use. But it's certainly a lot of appetite from insurers to be able to offer more coverage here, price it better. And again, it's all part of this, like filling in this protection gap and looking after their clients.
And I guess another area that we've seen a lot in the press is ESG and climate, and that came up in our survey that people want more and improved provision when it comes to those areas, and that's both in terms of data and models. But an area that I wanted to ask you about, Matthew, was algorithmic underwriting. In the survey, there was still some level of need for improvement when it comes to understanding, whether that is educating or understand the options available. But what do you think would hold back, the adoption of algorithmic underwriting?
Yeah, I mean, this is changing day by day, and we're hearing more about chat GPT, more about generative AI. But essentially, the benefit of algorithmic underwriting is when it's deployed well, it can take the skills of the best underwriter and insurance company, encapsulate the rules they're using, tap into credible data sources, and create a very efficient process to underwrite. The big challenge, though, of course, is if that data isn't available or there's holes in the data, you don't want the algorithmic underwriting system to start hallucinating in the terms of generative AI and start making up an answer because it thinks that answer is good enough. It has to be very closely linked to the reality. And that's why we're still seeing only a very small number of companies actually rolling this out, because they do need to build the technology and then they need to have people looking at it. But ultimately, it is going to be the future of underwriting for many of these areas where the data is becoming more commoditized and there's efficiencies in there. But the leaders will be those that can actually train the algorithmic underwriters in a way that is consistent and representative of the best underwriter out there.
If you're interested in finding out more about our member survey, please head to www.instech.co and click on the banner and you'll be directed to the highlights of our member survey. If you are an InsTech member though, please do look out in your email box for an extended version of the member survey which we'll be sending out. If you haven't received it, then please do contact us at hello@instech.co.